Hey guys, Toby Mathis here. And now that we have President Trump as who's going to be our 47th president, so President-elect Trump, what is that going to do to all the tax provisions that he's talking about, and how is it going to affect you? So this video is to go into how President Trump's tax proposals will impact you if enacted into law. And let me just put a big emphasis on that, if enacted. Now, the Republicans have, it looks like, the House and the Senate and the presidency, so the executive branch, so they should be able to get through what they want. But there's no guarantees in life, and there's no guarantee that what he talked about on the campaign trail will get enacted. But let's talk about the specific provisions, including his tariffs, that he talked about and what type of impact it could have on you. So number one, we have the Tax Cut and Jobs Act that was enacted 2017, and it made major changes to the tax brackets. It lowered the tax brackets. It added something called 199A, which is a 20% deduction for pass-through businesses. It lowered the corporate tax rates. It created a ceiling of $10,000 for state and local taxes, got rid of that personal exemption, got rid of miscellaneous itemized deductions, made a whole bunch of changes, had this bonus depreciation, which is $168K, going up to 100%. We've been phasing out the last couple years, and we're scheduled to phase out more. If they're able to keep the Tax Cut and Jobs Act provisions from expiring, we are going to see, it's going to have a major positive impact for us taxpayers. I'll go over that in a second. So one of the first things you look at is what is the change that's going to have. So we have these individual Tax Cut and Jobs Act provisions, which they can now make permanent. The way that the law was passed the first time, very few provisions were permanent. So like the corporate tax rate was actually permanent, but the things like the estate tax, miscellaneous itemized deductions, the elimination of the P's deduction, personal exemptions, miscellaneous itemized deductions, 199A, all of those were phasing out. So now we have the ability to continue those. Let's kind of go over a few of them. The Tax Cut and Jobs Act, estate tax. Right now, as we sit here today, it's $13.61 million exclusion per spouse. So we have this massive, over $27 million exclusion so that you don't get hit with a tax when you die. And what does that mean? It means they value all your assets, subtract off your liabilities, and that's the net value of your estate, and they tax it if it's over a certain amount with a federal tax that goes to 40%. So if you have an estate that's worth $30 million, for example, and you have a $27.2 million exclusion, right, then there's $3 million that's going to be taxed, and it's going to be taxed at the highest rate of 40%. So you're going to see about a $1.2 million tax hit on that estate. Make it a $50 million estate, and now we're talking about a $9 to $10 million estate tax bill on that estate. And what always happens is you have valuable assets, usually a lot of real estate, sometimes a business interest. Where do you come up with the cash to pay it? That's why people get really mad at that estate tax. Well, that was scheduled to phase out and go back down to its pre-Tax Cut and Jobs Act level of $5 million scheduled for inflation. So probably right around $7 million. So we were going to see it go from married couple $27.2 million to $28 million, because next year it goes up even higher. But going from $27 million to $14 million, it's going to get cut in half. So it's going to be a major impact to a lot of estates. And boy, estate tax practitioners, the people that, these financial planners and tax attorneys have been setting up all these slats and all these different things trying to schedule in case that goes away. So that's a good thing right there for you if you have a larger estate. That's a great bit of news. We can extend that out. That should get extended. I think these are highly likely to get extended. Number two, the SALT limitation. So for itemized deductions under your Schedule A, you would do things like your mortgage interest, charitable giving, your medical expenses if they exceeded 7.5%, and your state and local taxes were a deduction, but they were capped at $10,000. So Trump has proposed that we eliminate that limit, which means if you live in a state where you're paying high taxes, like New York, Maryland, California, states that have a income tax, you're going to be very, very happy because you'll be able to write off more. A lot of times you were phased out, so you're paying $50,000 in state and local taxes, and you were capped at 10, so you lost a deduction of $40,000. So this is going to have a pretty positive impact on people in those areas. And again, it seems like there's not a lot of headwinds to getting these things through. Another one that Trump talked about was to make Social Security taxes and the income that you make on Social Security exempt from income taxes. And this has been a controversy for a long time because you don't get to write off your Social Security tax. You get it partial when you're self-employed. You get to write off the employer portion. But as an individual, you're not getting a tax deduction for these. Yet you're taxed on the income for the benefit that it produces if you're over a certain limit, if you make over a certain amount. And so it's frustrating for people to have to receive benefits that are now taxable when I never got a tax deduction going in. So it seemed unfair. People are like, you tax it going in and you're taxing it going out. The government is double dipping. This would end that. And there's been proposals. I've actually put it on my channel before. Some of the proposals to eliminate this. For whatever reason, Congress couldn't get it done. This time, hopefully they get it done. And we get rid of penalizing people for making money in retirement beyond just their Social Security. They paid into it. If they're getting a benefit, the government should keep their hands off of it. Number two. Or another one. I don't know what number I'm at, probably 4. President Trump proposed exempting overtime pay as being, exempting it from income tax. I mean, he's floated the idea of eliminating the income tax, which isn't such a bad idea, and just going basically to tariffs, or what is tantamount to a national sales tax, which is essentially kind of what a tariff is. We'll get into that in a little bit. But exempting overtime pay. This one, to me, I don't know if it's ever going to have legs. Like, I give it maybe a puncher's chance of getting through, but better than when I see the next one, which is the tips. The tips tax is exempting tips. I don't know how you do that, because what I would do is I'd lower everybody to minimum wage and call everything that they're getting as a tip. I would say, hey, here's another way to pay people to get away from tax. And how do you stop that abuse? What's the percentage formula? Like, the IRS has a hard enough time right now. I live in Las Vegas, for example. They have whole divisions that focus on how to tax tips, because they know people get a lot of tax tips, cash tips, and they weren't necessarily reporting them. So they would do a percentage of what they believe is ordinary and assess that based off of what you were receiving anyway. So I don't know if that's what they're going to do and say, hey, we assume you're getting tips of this amount and it's exempt from tax. It just seems like it'd be a very difficult one to enforce. It's still out there, in both candidates, Harris and Trump talked about exempting tip income from being taxable as income tax. It's almost like a gift. If I want to give somebody a gift, hey, you did a great job, here's a gift. Why are you taxing it? Right? I could give somebody money and not be taxed. I could give somebody who's, a victim of a hurricane or floods or whatever. I can give them up to, I think it's $18,000 this year, and I don't have a taxable event. They don't have a taxable event. Why are they having to pay tax on it if it's a tip? So we'll see if that one actually makes it through. Again, I don't give it high chances. I think it'll get a lot of discussion, but again, it's something he's talked about is making it through. And we'll talk about how we pay for these in a minute. How about this one? This one, for all you guys that have an auto loan, would like this, which was to add to the itemized deduction the interest that you pay on an auto loan. So if you're paying interest on an auto loan, and that added with your mortgage interest, along with your charitable giving, along with the amount of medical expenses that exceed 7.5% of your adjusted gross income, and you add up all these and as itemized deductions, if you exceed the standard deduction, then you'd get a benefit. Problem is only about 20% of the people actually get a benefit from itemized deductions. That might raise that a little bit, but I'm not certain as to what impact that will have. I believe that the Tax Foundation said it was going to be, it's minute. It's less than 1%. It's not huge, but there's something there, maybe. That one I could see getting through because, again, the automobile lobby is pretty strong. And I could see a lot of people saying, yeah, if you're incurring this, let's give you a benefit. Let's give you a deduction if you exceed this large amount. The standard deduction right now, for example, is $14,600. For single, what would that be? $29,200 if married filing jointly. So you'd have to have a lot of expenses to exceed that, and then you get to write that off to the extent that it's in excess. It's not a huge amount. So I could see that one getting through. Other things they're talking about, lowering the tax rate of domestic businesses. In other words, Trump was very vocal about trying to bring more manufacturing jobs back into the United States. And here's another way to do it, which is to incentivize companies. Hey, I'll tax you at a lower rate. You want to go and do it internationally, that's fine. Profits here, you're going to be taxed at 21%. He's talked about taking that to 20%, by the way. But if you do it domestically, I'm going to give you another 5% haircut. I don't know how big of an impact that would have. My guess is very little, but it sounds good, right? So the numbers I'm seeing is that it's not going to have a huge impact on the economy, like a fraction of some of these others, the other proposals, as far as the actual impact it will have. Other fun stuff, eliminating the green energy tax credits. I mean, that's been a mess from the get-go. I know folks that are in that area. Again, it's one of those things that maybe it's exciting to his base, but I don't think it's going to have an impact. Overall, I don't think it's actually going to have a big impact. What's going to have an impact? If we have a universal import, a tariff. And before I get flooded in the comments of what an idiot I am because I don't understand tariffs, because only certain people can understand tariffs. Yes, I'm very much aware that the importer pays the tariff. It is money that goes to our government, though, so it offsets the benefits, the loss of revenue from the government by giving these other tax reductions and enacting and continuing provisions that give you great tax relief. Like, I would love to see the bonus depreciation go back to 100% because it helps real estate, helps people in real estate when you're investing in real estate. And the little guy can now do battle with the big guys that have these huge, massive amounts of money that they're deploying to go out and buy all these houses cash. Here, at least I could get a tax benefit to try to add some parity. But there's a cost to it. Here's how we're going to pay for some of that cost. It's with a tariff. And I am aware that it's not the foreign country. I know everybody gets mad, like Trump's always saying, we're going to make them pay. They do pay because it makes their stuff more expensive. So if I am a U.S. manufacturer of a widget and I sell it for $1 and my foreign counterpart over there is selling it for 90 cents and can come in here and beat me by making it 20% more expensive for that counterpart, it's going to give me the ability perhaps to actually eke out a profit or actually make a go of it and exist in the United States. That plus if my taxes are lowered a little bit on the domestic production on that income, maybe there's enough incentive there so I can do battle with folks that have lower costs of labor and lower costs of actually manufacturing. But at the end of the day, who pays it? It's us. Let's just be straight up. It's a tax. They call it a tariff, but it just means that it's more expensive for them. Now, does that mean that everything's more expensive? Not necessarily. It means that maybe those U.S. manufacturers get a leg up. Eventually, the tariff goes away because now they're able to operate in a profit margin. They're able to do things with the lower tax that they're able to get up and running, and now they can compete with some of the international suppliers. But at the end of the day, it is something that the government will collect. And again, the idea has been floated of just having tariffs or a national sales tax. Not a bad idea. It actually, I've looked at the numbers many times. I've read books on it. You look at it called the fair tax and all these things. That's just another way of saying the exact same thing, because at the end of the day, we pay it the same way we would be paying a sales tax. But it does make things a little more expensive. All of these, let's be frank, are going to make things a little more expensive. And when you do that and you're going to couple it with the lowering of the interest rates by the Fed, what do you think we're going to get, guys? Like, let's not be naive. We're going to end up with inflation. It's going to absolutely happen. So we talked about 20% on all imports, then a 50% tariff on imports from China. Whew. And that's going to be a kick in the kneecap. Don't expect them just to go, yeah, I'm cool with you guys tariffing us. We're not going to tariff you. No, they're going to do it back at us. It's going to be a little bit of a trade war, and it's going to get ugly. It's going to make things more expensive. It's going to make us less competitive internationally, but it's going to make us stronger domestically. That's the idea. What's the net impact? It's going to offset, $1 trillion or so, I think is what I saw from Tax Foundation. I think it was, $1 trillion bucks or so that it's going to help offset on some of those tax benefits, maybe up to $2 trillion. It depends on whose guess you're going with. But at the end of the day, what we know for certain, since we had the Tax Cut and Jobs Act discounts already, we already know what that does. And what it did is it raised up GDP. It raised up what we were producing and actually created more tax base as a result. Now, if Trump's provisions get enacted, if all of what I just kind of went over actually happened, what is it going to do for you? Well, the University of Penn, Wharton School of Business, I think they call it the Wharton Project, estimated that it's going to increase our deficits. And if it increases our deficits, that means we're printing more cash, which is devaluing the U.S. dollar, which is increasing the value of all investments, things like that. So it means inflation. What is that going to do? It's going to mean that you better be in real estate and stock and Bitcoin and all these other things rather than just sitting there with U.S. dollars is what it means. It'll be interesting to see what everybody does with their bucks. But it will mean that you're paying lower amounts of tax, because one of the big parts of the Tax Cut and Jobs Act was lower tax brackets overall. It's like they restructured, and it was a huge benefit. So if you are making, according to Wharton, about $48,000, if you are making $48,000 a year, the net gain under Trump is 1.8%, or about $870. So what does it mean to you? An extra $870. If you are making $81,000 a year, you're middle class, you're right there, the income gain under Trump by getting these extra benefits is $1,740. Boom. And we kind of like that. One thing I did leave out was the child tax credit being doubled at the time as well. There is benefit. And both of them, both candidates were talking about that tax credit. I think Kamala wanted $6,000 and Trump is at the $2,000. I think Trump wins out at the $2,000. But that is a little bit of a benefit as well that we don't want to miss. But if you're making $81,000 a year, income tax benefit, $1,740, which is fantastic. Income tax bracket at $138,000. So you're definitely, you might consider yourself middle class, but you're definitely upper middle class. The benefit's 2.8%. 2.8%, or just under $4,000. So you're making around $140. What is the benefit? About $4,000. Now, that maybe some of you guys are like, oh, that's not that big of a benefit. Well, investors get other benefits, businesses get other benefits. I'm just talking about regular taxpayers are also getting a benefit because those tax rates are lower. Now, let's say that you're probably like a professional. We call it a top earner. Your income tax bracket, you're right around $327,000. That's where they did it. The income tax gain is 2.7%, so it's a little bit higher than your counterpart. The actual dollar amount's $9,000, $9,020 a year. So you're making just over $300,000. You're going to get an extra $9,000. And again, obviously, if you're investing that stuff and you're putting it into other things, there's additional tax benefits to be had. Now, top 1%, $1.8 million and above. Rich folks, you're killing it. You don't need this. They're getting a 2.6 benefit, 2.6%, so just underneath their other counterparts, but the tax or the actual dollar amount It's $47,000 a year. So you're rich, you're in the 1%. Your taxes are going down about $47,000 a year. Not too bad, right? But there, again, there's all these other incentives built in there, which can also yield huge tax relief to investors. People that invest in real estate, for example, there's strong incentives so we can attack that. If you're investing in dividend stocks, huge benefits to this day, right? There's still tax benefits to doing that. If you run a small business, the 199A, if you have a flow-through business, an S-Corp, a partnership, LLC taxed as either of those, even an LLC taxed as a sole proprietor, you get this 20% deduction depending on the type of business. It could be a 20% deduction. So you're making $100,000 a year, you only have to pay tax on 80. So that would come back, assuming that that Trump and Congress are able to get something through and it gets passed. It could be an absolute boon for taxpayers. I just wanted to go over those with you so you understood how these things work. And then you can yell at me about, again, not understanding tariffs. Somebody always does. End of the day, it's a benefit to the taxpayers on the side of tax, but it's a negative on the side of inflation. So you got to make sure that you're doing the investing types so you're hedging against your inflation. But there are some strong tax benefits, and hopefully we'll see some others. Maybe they'll get more creative. And it'll be really interesting to see if that tariff morphs into a national sales tax. You heard it here first if it does. All right. If you like this type of information, please like and subscribe and share it with anybody you think would benefit from it. If you think anything I said was wrong or if I missed something, please put it in the comments below. People do read those, and so you can always correct me if I said something mistaken or you think that there's something I missed. Go ahead and put it in the comments. People do respond to that. And for everybody else, see you around.